Hi, welcome to my channel. I'm the FX trade analyst. My name is Chris. On this channel, I bring you weekly analysis on the Forex market. We'll be focusing on the currency pairs, and it's going to be a weekly activity where I review and analyze the market for the past week, and then we look at the possible trade setups for the coming week, right? So this week we start, or this weekend we start looking at the currency pairs. We'll be reviewing just three currency pairs. I'll be reviewing the EURUSD, the GBPUSD, and XAUUSD. In the course of the week, if there's any particular currency pair you will want me to review or put on the list of my review list, and then you just comment below, and then I'll start to review those. But possibly I know that the majority of the people who trade the forex, the currency pairs, are mostly trading the EURUSD, GBPUSD, and gold. Gold is a heavy trade, so I'll be reviewing that as well. And of course, we jump right into the chart. The dollar index in the past week had become bearish, right? So in this week, this is the weekly chart. Notice that this week has been very long, bearish candle, closing very heavily, right? So this is a very strong bearish candle, so meaning that the momentum for the bearish will continue in the coming week. So we tend to see I will tend to see a dollar index that will move up to this support line, right? If I look at the dollar index, there's a support line here. So I look at, I'm expecting that the dollar will move up to this point, up to this support before it will bounce and possibly start to make its way back up. All right, that's what I expect. So, but if I go into the daily time frame, I'll notice that in the course of the week, I'll just delete this. In the course of the week, it looks like there's going to be a possible pullback on the dollar. 4-hour time frame shows that a possible reversal pattern might happen. So if we look at it, we'll see that it had made its way all the way down, right? Had made all the way down, and then there might be a possible reversal. So there's an attempt for a reversal here. There was an attempt on a reversal at this point, which looked like a fake reversal. So and then it pulled down again, but this might look like possibly a proper reversal that we'll see that will go up. If I pull up the Fibs tool and I make a Fibonacci extension tool on this, most likely we might see a possible reversal on dollar index that will get to the 50%, and then maybe before it continues to go down. But then again, if you look at the last support level on the dollar, right? There might be a possibility that in this area, which is the 618 retracement zone, we might see that maybe the dollar might possibly pull back to this zone, before it continues to move to the downside, right? So those are the things I'm expecting. So because of this, because of a possibility to a reversal for the dollar, I'm expecting that it is going to still affect the moves or for all the other currency pairs. So knowing this and having this at the back of my mind in my own analysis, the next thing I will do is, if I come to the EURUSD and I want to make an analysis for it, if you notice, if I go to the daily time frame, I'll notice that EURUSD has changed character and has broken this last resistance that was here. Let me mark out the resistance. For the past week, during the past week, the Euro USD has been greatly trading below this resistance level. All right, so we've seen a massive pull down after the last retest, pull up, came down and pulled back, tested this place, came back again, pulled back up there, tested this place, came back before it now broke this and went to the upside. All right, so and if you look, I'll see that there's another resistance area here. There's a resistance area here, and we notice what happened there. Just a moment to add my resistance point. You notice that this place, in this resistance area, there's a reaction. If I move to the 4-hour time frame, I'll notice that there's a reaction in this place. So there's a reaction here, and of course there's a reaction in this area. There's a reaction here, and of course this reaction did not hold, so it did not break through here, and it went back up. But meaning that possibly the trade setup for the coming week might just be very dicey, so we'll have to watch it carefully what is going to happen there. But based on the move that I saw on the dollar index, what I'm expecting is that if I remove all of this and remove this, I might see a possible reversal to, and I pull up my Fibs tool and mark out the Fibonacci retracement zones. What I might think will happen is Euro USD might follow the same pattern for the dollar index. All right, so we might see a possible retracement of this down to the 618 retracement zone right before it continues to move back up. All right, but we have to watch it because after Euro USD broke this area, it has not retested it. I mean, on the 4-hour time frame, there has not been any major retest. The retest has happened here. But do I expect that this will pull back to this level? Well, yes, I expect it to pull back to that level simply because I'm looking at the dollar index and I'm seeing maybe there might be a possible reversal. So if we quickly go back to the dollar index and then we look at it again, another thing that might happen, which is a possibility of what we're going to expect, is that there might be possibly a, a range here, right? I might see that maybe the dollar index might not really pull back. It might just range in this place, right? It might just pull back and pull up, creating something that might look like a possible bear flag. If a bear flag happens, that means there's going to be a possibility that this trade will not even pull back to the 382. It may just pull down straight and continues to go to the downside. If that happens, I mean, during the week, we're going to be looking out for whatever that's going to happen with this trade. So in Euro USD, if there's going to be a range, then I'm expecting that the Euro USD will possibly range in this place, in this area. It might pull back, pull up, pull back, pull up, creating a certain flag pattern here. If it creates a flag pattern, that means the possibility that it will pull back up will happen. All right. So in the coming week, after market opens on Sunday, I will look at what is going to happen on Monday. I will carefully watch and see the kind of pattern that will generate. If it begins to range in this space, if it begins to range in this area, right? If I begin to see a market range here, then what I'm going to possibly do is expect that it might become a bull flag and then it might continue to go on upside. But if it retraces and even comes down to the 382 and then moves down to 0.5, then what I'm going to do is I will just go to the, so I'll just take out this. I'll tell you the trade setups that I might just be taking. So if it pulls back, I will go to the 15 minutes time frame when the market opens next week, and I'll begin to closely monitor it. If I see any move that comes to, if I see any move that moves down to this point and goes back up and then breaks this support area and then drops back here, all right, then I'm possibly going to take a trade in this area. So what I'm going to do is once this breaks this last support, I'm going to be ready to take a trade from here, I'm going to go short from here, from this area, and then maybe put my stop loss just above this level, and then be able to trade or to see if I can catch the move up until the 50% retracement, or maybe the 618. But how do I know? How do I catch any of this trade? I don't put a stop loss when everybody has got their own entry pattern. Right, my entry pattern is I will just I can do a separate video to explain my entry pattern. But I enter a trade, I put my stop loss, but I don't necessarily put my take profit. I'll do what I call the trailing stop. All right, the trailing stop helps me to be able to move my stop losses and follow the trade as it goes, so that if the possibility that the trade would go longer or will stay for longer or make more larger moves, I'm able to catch more pips than just closing out on a trade. So that's what I expect to do. So I will be carefully and I will look out for this trade. All right, I'll look out for this move and then maybe see if I'm able to catch this move. So I'll be looking at this area, this confluence, on what is going to happen in fact in this entire area. Okay, I'm looking at what is going to happen in this area. So see if this move is going to go to the downside, break this support, and then retest the support, the resistance of the support area, and then I'll catch the move up until downside. But if it doesn't, and it begins to, of course, range in this place, it comes down, it goes up, it comes down. If it happens to range here, then I'll possibly be looking forward to a possible move to the upside. So I'll be very careful and look out for what's going to happen. Maybe in the course of the week, I might just do another video after we've seen the move that is going to take. We'll do a separate video to be able to quickly, explain what I think will happen in the course of the week. But let's look out for these confluences. Of course, this might be the next possible trade I'm going to take. So let's look out for it. For those who might want to scalp on these trades, if you're looking at scalping on this trade, another thing we could do is, sorry if I take these things out, we could go to a lower time frame, right? I could go to say a 5 minutes time frame and then look at this move. If you look at the 5 minutes time frame, you'll notice that the the there's been a change of character, okay, and the change of character has looked like it's moving to the downside. So I'll carefully look at what is going to happen in this area and then see if I'm able to take any short trades, take any short trade, maybe from if this market pulls back. I'm expecting something like this to happen. This trade might come here and pull back again, right, to test this fair value gap, right? There's a fair value gap here, and if you carefully look, this is a fair value gap. Most times when trade this will, I'll call this a supply zone. Most times when trade reverses or when trade moves, they move and they test fair value gap. Fair value gaps, of course, are gaps created, imbalances created in the market when the market does a move. And if you understand the market moves, of course, most times market will come back to retest those places and then continue their move. So I'm expecting that the market, if it does this, it will come back to retest this zone and then continue. So if I want to scalp and do a quick trade within the week, I might be looking at doing short from here. I'll place place my pending order here, and then maybe this might be too tight a stop loss, so I might just possibly widen it and put my stop loss just below this, before the wick of the candle, the last tick before the wick of the candle. Up my stop loss there, and then see if I can catch a trade up to this point. So those, for those who want to do a quick scalp, of course this scalp will give you quite a giant move. That's about 3 to 1 risk to reward if you're able to quickly catch this, this move. All right, so another thing we're going to look at in the coming week, or something that I know that might happen, is that if I go to the 1 hour time frame, if the Fibonacci tool holds and then this trade pulls down to come and test these zones, if it pulls down to come and test this 612, then of course I'm possibly looking at a possible reversal and then trade will go to the upside. So I'll be looking at this conference area as well, and then I'll just mark out this zone and say, okay, I'm looking at this area to be my possible demand zone. You know, mark this out as a possible demand zone. So this demand zone, I'll be looking at what happens when trade comes to this point, right? The demand zone might it's almost down to the last support level. So if I watch what happens here, the market might come to test this support and then pull back and then create a reversal pattern, of course, and then continue to go on. So we'll just watch this confluence, right? And watch this market model, market mix model, and watch what happens when the reversal begins to happen. So we're able to see how we can catch this trade going up. This is a reversal pattern. So we'll watch it closely and see what happens, and then see if we're able to catch another trade going up to the upside. So let's watch. This whole area is my area of interest in the coming week. So it's either the market begins to make a descent to the downside, or it ranges and pulls back up, creates a bull flag here, and then begins to go up, or it will pull back to the 618, or it might pull back to the 50% retracement. We'll just watch it closely, all right? We're not casting anything on stone. We'll just keep watching. The good thing about the market is just follow the move of the market. You might make all your predictions and all your analysis, but the market gives you something else. So that's why it's good. Even when you plan and when you analyze your market, you still watch, because market has a mind of its own. You can't force it. You can't insist that whatever you analyze happens the way you want it to happen. You just watch the market and follow the flow of the market. Market will always tell you where it's going to. So if by the time we see that it pulls back, then we might be looking at another possible trade setups in this area, right? In this area. So you see if you can create another trade, set up another trade. I know here, put your stop loss just below this last week, and then push up to see if you can capture all of that move to this side. So this might be the trades I'm looking at to take in Euro USD in the coming week. Okay, so we go to the GBPUSD. GBPUSD might follow the same pattern. We'll go to the daily time frame. If I go to the daily time frame, I would see that actually even the pound dollar had potentially begin to move to the upside. Of course, if you look, there's a certain support area which was here, certain support area which was here that was broken. So this is a support line, resistance line. All right, so this support and resistance line has been holding on GBPUSD for a long time. So where before the last week we saw a break of that line, we saw this candle, this particular candle broke through this resistance level and then began a move up to the upside. There's a retest here, all right? Market came back, retested this zone, and then continued to move, make a giant move to this point. Now it has come to another support, another resistance level here, right? I'll try to mark it out. I think there's a resistance level here that we're going to carefully look forward to. There's one here, sorry. There's one here we're going to look out for. And then there's another one here, right? Which is where it's currently trying to pull back or make a reversal from. So this place, right? So this place, of course, if we go to the 4-hour time frame, we'll be able to notice the possible pullbacks from that area. So you notice that, you know, this place has marked, this place has happened to be a support before here, and all through all these places, it has acted like support and resistance in all of these places. All right, so we're looking at what is going to happen at this confluence area. I was expecting that apparently maybe pounds will have come to this place before it makes a reversal, but looking at what might happen if I go into the 1-hour time frame. So if there might be a possible reversal, just like we're expecting the dollar index to reverse, And if I pull my Fibonacci tool for this last move that happened from here up to this point, then I'm going to see a possible retracement in this area where I'll see maybe GBPUSD pull back to this point and then pull back up again and come down to apparently maybe the 618 before it continues to go up. But just the same predictions I have for the EURUSD is the same predictions I have for the GBPUSD. They almost move in sync, right? They almost move closely in the same pattern with each other. If you've studied the market, and you see that almost all their move looks like they are moving in the same sync, and it's all informed with what happens with the dollar index. So if, like I said before with the Euro USD, we watch it closely. If this becomes a a range here, if it becomes the range here, then there might be possibility that this will now turn to a bull flag, and then it will continue to move to the upside, right? So let's look out if this market is going to range in this area. Let's look at if it's going to range in this area. If it ranges in this area, of course, we'll possibly look out for a bull flag and take a trade to the upside. But if it doesn't, I'll just take out this thing so we're clear and we see what we're doing. If it doesn't, then there may possibility that we'll have to look for possible shorts. All right, possible shorts to the downside. Now I need to make a quick remark. I know that most people have said you don't trade against the trend of the market. But sometimes if you look at the market and you understand the analysis very well, and then the market begins to do a retracement, because the market does not move in one direction. Market moves up and then it retraces, it moves back up and it retraces. So it tries to balance every imbalance in the market as it goes. So during this balance and imbalance in the market, if you understand your analysis very well, you can possibly catch a few pips or catch very giant pips in the retracement of any market. So I'm looking at making this trade in this retracement if it's going to retrace. But before I'll take this trade, sorry, I'll take this out. Before I make this trade, what I'll do is I'll make sure that if I go to my 15 minutes time frame, I'll make sure that I wait for this to pull back to this point. I'll wait for it to pull back, break the structure, and then come back. Once it pulls back to this point and then pulls back to this support line. Now, why do I say there's a support line? Now, if you look, you'll carefully see that there's a resistance, a support and resistance area that is created here, right? Just this area. If you notice, this happened here. If you notice here as well, happened here. If you notice here as well, all these places marked as a support for this. So it did not break down, did not break below this support area. It keeps going up. So I watch it carefully and I'll see if this trade will come back and test this support again. If it comes back, test the support, comes back, then there might be a possibility that this might become a range. And if it becomes a range, we'll carefully have to wait for it to create something like this pattern and then pull to the upside. All right, then I will possibly look for a possible trade by the time we see that this trade has broken this area of resistance, and maybe wait for it to retest, right? Wait for it to retest here, and then we can possibly look for a trade to the upside from here. Okay, look for a trade to the upside from here, right? But then again, if this does not become a range and the market begins to pull back to this side, maybe we see a possible move that will happen and it will come down, break this place, and maybe retest it. Then that means we might see a possible move to the downside, all right? Where we might I'm thinking that if it pulls back, it might get to this 50%, or maybe it will pull back again and get to this 618 before it continues to go to the upside. All right, so let's watch. If this move happens, that means I'm going to be looking for possible shorts from here and trying to catch, maybe put my stop loss just below this level, and then see if I can catch my trade up to the 50% retracement or maybe up to this 618 retracement. So those are the two possible setups. And then remember, the last one is that it has become an uptrend. All right, this market has changed to an uptrend. So this is a bull market. We're just trying to create opportunities for the retracement for this. And the major trade we are going to be looking for is to go longs on this. All right, and going long is that we're looking for, if this market becomes a range and then creates a flag pattern, then we are going to go long from here. Or if it pulls back to any of these zones, and any of these zones means either the 50% zone or maybe pulls back to the 618 zone, all right, then we're able to begin to look for possible longs from any of these zones, right? I look for possible long from any of these zones, and then maybe catch it up to the last this next resistance area. All right, so let's look at what is going to happen in this area. Okay, uh that's what I expect that will happen with the GBPUSD. Now let's look at the last currency pair, which is the XAUUSD. All right, XAUUSD, the gold has been quite interesting. It has been very bullish. Has been swiftly bullish, following a certain trend line up until the last week. So in the last week we saw a massive pullback to this last support area. If we mark out this area, we'll see that there was this support area here, all right, that it came to retest. In fact, if you look at it closely, this move came back to take out this liquidity here, all right. There was the wick of this candle, of course, holds a large number of liquidity. So it came up to take out this liquidity because most people's stop losses are placed here for this move. So it came, swiped it, and then it begins to go up. Now, if you look at this move that has been, this last move that has just been made by gold, you will see that there's a possibility that this has become a bull flag. All right. So if you notice that this is now looking like the pole, and then this is now looking like the flag pattern. All right, so possibly I'm looking at gold will begin to go up from here, right? That's the only thing I can talk about gold. I think from what I've just looked at, gold might just possibly begin to make its move to the upside from here. Okay, but just looking at it, is there a possibility that this gold might reverse and go to lower? Let me remove and clean up this. I think that if I go to the 1 hour time frame and we take a closer look at the moves, we see that just in the last week, gold has been able to, it pulled up, then started to range from here, then swiped the last range, went back up, cleaned up the liquidity that was generated in this line, cleaned up this liquidity. All right, so cleaned up this liquidity and then started to make moves to the upside now. So it has created a high and then lower low, another lower, higher high, and then pull back to another lower low. And in this move, we're expecting it to make another higher high. But if you notice again, there's been a liquidity that has been created as well on this trend line. All right. So what I might possibly be looking at might happen, but I can't tell, is that in the market open on Sunday, we might possibly see that the gold might come to sweep all of this liquidity. Maybe we'll just swipe all of this and then start it to move to the upside from somewhere here. But that's an assumption. I don't know, because there's always gaps that are created in after the market closes and then opens. There's gaps due to a couple of factors in the market. So those gaps might just come and wipe up this liquidity and begin to move up. But if it doesn't happen, then what I'm expecting, sorry, I'll just wipe up these things. What I'm expecting that will happen with gold is, if I go to the 15 minutes time frame, I'm expecting that we've seen that gold had pulled back a bit. So I'm expecting to see the possibilities of going long from somewhere here, possibilities of going long and catching this move up until this point. Okay, and then putting my stop loss just below this, but possibly below this. All right. Um, this setup is what I'm expecting to happen, of course, but then again, before it happens, remember, we'll have to wait for the market to open so we can see where the market opens from. Maybe if it drops and then begins to make its move, we wait for the market maker model to form, and then we'll see that change of structure has happened and it's beginning to go to the upside. And then we'll look for fair value gaps created in any of these places to be able to use it to go long. But I'm expecting that we go long somewhere along the line. Gold is still going to be very, very bullish. So we watch closely on what gold is going to be. If you look at, it's looking like the flag has become, is beginning to take time. But possibly if this does not happen, then I can tell you another scenario that I see. If I go back to the 4-hour time frame, the possible scenario that I see that will happen is that gold might pull back. If this scenario that I painted first does not happen, then we might see gold coming back to swipe all of this, and come back maybe to this level, right? To this level before it will begin to go to the upside. Now, why this level? If you notice, there's another support that has done resistance level in this area, right? So I'll just mark it out, right? This will might become the next demand zone, but I don't know, we're just looking at it just because of this. All right, so if it doesn't pull back to this and starts to go up, then possibly the first scenario is going to work. But in fact, I'm more banking on the first scenario, that there's going to be a possible pullback, sorry, a possible bullish side that will happen from this side, from the gold, from that point of confluence that we've created. But just let's watch gold closely and see what happens. Gold is very, very liquid, and we can possibly see what's going to happen. All right. So if it breaks below this and it doesn't begin to, if market opens and it breaks and swipes all this liquidity and doesn't begin to go up, then what we might possibly look out for is a possible pullback to any of these levels before gold will begin to become bullish again. All right, that's analysis for the three currency pairs for the week. In the course of the week, I think what I can do is I'll make videos of the trades that I take. Of course, these are the possible moves I see. Remember, in all of these moves, there are small moves and small opportunities that we can leverage on with the market moves that we can still take. So in the course of the week, if I see any particular very interesting trade setup, I might just quickly take the trade and then analyze it as well. But at every weekend, what we're going to do is we'll review everything we've done. So in the coming weekend, we'll review this setup on this analysis that we've created, and these possible confluences we believe that is going to have massive reversals and massive trade. And we'll see the one that works, see the one that does not work. And if you'd be able to take any of this trade, or if you see that any of them works, you can comment in the comment section. You can, possibly tell me what you think, or even if you feel that there's analysis I didn't get it quite right, and there's something you have that is better than what I've got. Of course, feel free to comment. We're still all learning. I'm quite very new to forex trading, I must say, and this my channel is just starting. For this is my very first video, but I believe that in the coming week, and as I begin to bring you more analysis, you will see that I've understood the moves in this market a bit better, and I'm able to make incisive and very valid decisions. I've become quite profitable with my small size account, and I'm growing it slowly. So if you're a new trader like me and you want to slowly grow your account and become profitable the way I am, I mean, let's journey together, right? I'm willing to take in reactions and comments from whatever anybody thinks, and let's see what happens. So see you next week when I will review what we've done, see the trade setups that work, see the one that does not work, see why the one that does not work, and then make further analysis for the coming week. Until then, please subscribe and like, and I'll see you.